Good morning, Predicted Trades family. Hope everybody's doing well. And we got a little bit of slippage here overnight. So let's start with a little bit of review. We had our FOMC, where we ran up and tapped the daily 200. Had that big sell-off from it, right back to that 4,300 level. And that overnight drop, right? That held our 4260 on Wednesday. I'm sorry, FOMC was right here. Alright, so Tuesday ran up and tagged that daily 200. Then we slipped down for FOMC, where we collected at 4260. 73 ran back up to 4300 on FOMC, but got stuffed right back down. Big rejection at the 200, and a pretty equal rejection when we tapped 4300, right? Yesterday was pretty much just consolidation, didn't really go anywhere, just stayed in a range, and could not get back to 4,300 for that test. So not surprised to see that we are slipping a little lower. We have started a bit of a downtrend, a channel that you could even mark, right? Let's see. Just gonna update this real quick. There we go, and if you wanted, you could even drag this down here. Right about there. So we are in a little bit of a down channel now, and we're coming back to key daily moving averages. ES has arrived back at the daily 8, slipping a little bit below it, coming back up right now. It is OPEX monthly option expiration today on Friday, the 19th. So, we maybe shouldn't expect some huge drop in reversion of the mean today. We could easily just stay in this range. We do have POC up above in the middle of these squeezes, so we could just have a cover pop, fight back, and stay in between some key levels. But if we are going to break down and start to fire these squeezes to the downside, likely going to have a cover pop back up to 4260, 73. But if we start to get stuffed, rejecting there and start to come back below this low around 4250, right? And ultimately giving out this pre-market low, then likely coming back to this 4232, 4205, where the daily 15 now sits. And the daily 21 is caught up with 4165, but not really expecting a 100-point drop on an OPEX Friday, right? Can very easily just stay in this range, fight our way back to all of this consolidation to close out the month. Just for the heck of it, let's go ahead and look at a monthly candle. And just to get a feel, yeah, I was just going to see if there's any key levels kind of around that we could potentially magnet to. Usually I'd be looking at candle bodies, but not too much around. Anyway, back down to our normal time frames. So for today, let's see if we can hold this 4-hour squeeze bottom, get back above this daily 8, and push back into this consolidation. Ultimately, 4260, 4273 is where I think we will, we could pop up and kind of consolidate around there. POC is 4273 currently. So it could be a magnet that pulls us up, maybe even gets us through this trend line from highs in an effort to get back to 4300 or that daily 200. But not going to be over optimistic to the long side. We've had a pretty clear couple of days of working our way back down. So to the upside, let's see if we can get to that 73 for a test. And at the same time, we'll be testing kind of this trend line from the highs of this week. If we can get past that, the goal would be to 4,300, but we couldn't even get there yesterday. If we are going to see more downside and reject 73, reject 60, next stop is this 42.32 and then 42.05, where the daily 15 sits. NQ. It's also worth noting we have that 4-hour 45 sitting here around 42.50. We have covered this before, but that 45 MA is kind of my last stop on a trend continuing, right? Last time we were there, we came down and gave it a tap, consolidated, and then took back off. So today could look very similar to this Monday, August 9th, where we're coming down to test that 45, but we hold it and consolidate, right? Just to give us a preview of what we could deal with today. But if we start to lose that 45, then we cascade to these next key levels. And you can see this low from last Thursday is around that 42.05 on NQ. Basically got the same kind of scenario where trying to hold squeeze bottoms, trying to hold the key level, looking for a potential cover pop back to that daily 8 and that 462, making a nice target to the upside to at least get back to the bottom of this consolidation. Let's also update this trend line. Ever so slightly. So yeah, let's see if we can hold squeeze bottoms, our pre-market low, which tagged this 356.5. See if this little zone can provide us enough support to push for a cover pop. Get back to at least this key level in the middle of consolidation at 462, and maybe back even to this 531 and at the top of this consolidation range, with the ultimate goal, if we are going to actually push today, to get to this 13,500. But just like on ES, could likely get up to these levels in this little zone where the daily 8 sits and just consolidate. Could even just consolidate between the daily 8 and the daily 15, right? Big liquidity pocket with these daily moving averages. So we could just slip and bounce in between those. But if we start to give out this 356.5, this daily 8, I'm sorry, this daily 15, then we can cascade down to that 312, also kind of last Thursday's low, and past that 13,220. But that would be, you know, another, what, like 200 points down, almost? No, 150 points down. It's not at all what I meant to hit. There we go. So let's see if this zone can hold us. And this 4-hour squeeze bottom start to get us up for a cover pop. Definitely watch the lows from Thursday and Wednesday, right around this 425. Basically about where VWAP is right now. It could be a cover pop up near those lows and then a reject to come back to the zone. But yeah, definitely watch the daily 8 and 15. It's going to set a range for us that if we start to break out of that to the downside, we've got our targets. Last Thursday's low to definitely watch as well. Because as you can see, we had a big old pop up on that CPI, and we held on Thursday at that level. So if we start to give that out, it could be a drop back to that consolidation around CPI. And we do have the daily 21 right there at that 150. That would be a 200 point further down move, but we do kind of have that in the tank for ATR. Just about. But we could always just stay in between those moving averages here to close the month, where we have all this price action for the month, right? Alrighty. Alright, the ready has almost tapped last Thursday's low at about that 1973. And watch this high as well around 1958, 1960, where the daily 15 now sits. Let's see if this 4-hour squeeze can hold us. Sorry, it's a 2-hour squeeze. Let's see if that can hold the ready up to get it back above the daily 8 with the goal of getting back to the daily 200 and this consolidation that we had. But if we start to give out this 73, you can see we bounced last Thursday. Even on Wednesday, we bounced pretty much right around there, 76. And pre-market, we bounced there. So if that starts to give out, we could come back to that daily 15 and the daily 21 down at 31. About a 30-point ATR and already down 40-point ATR. So yeah, the 21 is a little bit maybe out of reach of an ATR today. Could easily just stay up here, clinging to the daily 8, or slip, you know, between the 8 and the 15. YM is a little cleaner in that it's still holding above the daily 8. We've got the daily 200, which was providing support this week. Once we got over it on Monday, bounced at it, didn't even get to it yesterday, so slight slip below. So let's see. YM will be pretty clear if we can hold this squeeze bottom, the daily 8, get back above the daily 200 and turn it into support again. Then we can get that cover pop to get back to our consolidation. As we know, overnight is lower volume. So now that we have broken the 200, let's see if buyers quickly step in to get us right back. So we could see that early YM rotation to help set direction and get us back into range. But if YM starts to lose the daily 8 here, let's look at last Thursday's low, which sits down here at the daily 15. Perfect how they went sideways long enough for these MAs to catch up at 2 key levels. So if we do start to break down and lose that daily 8, first stop would be this 33,520-ish where we bounced on Monday. And if we lose that, we also have that daily Keltner there. So if we lose that, a little pocket of support, then likely back to the daily 15, back to Thursday's low. So I'd watch that Thursday low in each index. Looks like Ruddy is closest to it, so it could violate it first. But YM kind of holding up the best and still a good tick above Thursday's low. So YM is going to be a little clearer for direction. Let's see if it can hold this pocket with the daily 8 and daily 200, get back above the 200, or if it's going to lose the daily 8 and reject it, then it's 520, and then down to about that 300, 268. Apple. Apple tried to hold up on this trend line yesterday. Now overnight, breaking down to our next key level, that 172.11, pretty much already wicked it. So let's see, as long as Apple can continue to hold this 172.11. And get back above 173 and yesterday's low, can try to get back up to this consolidation from the last couple of days. Definitely watch this week's lows, which are also down at our near our 171.31. So we got a nice zone here, about $1 wide, actually a little less than $1 wide, and we have all of our squeeze bottoms there. So, looking for Apple to try to hold this zone and these squeeze bottoms and stay in consolidation, not firing these to the downside. But if we start to slip through our zone and start rejecting it, then we can fire these squeezes down with the first stop or target of being this 168, where the first Keltner and the daily 15 sit. Our daily 8 and second Keltner will likely be stepping up right in this zone, right in the middle or near the top. So also a little more support stepping in there. So could reach a little bit past this to tag the daily 8 and that Keltner as they step up to meet price action. And if we start to lose those things, then down to the daily 15. Apple with about a 4.8 TR, I believe. So closed around 74. 68 is maybe a little bit of a reach. 170, 169 would kind of be the extent of an ATR. So let's see if our zone can hold us and start a cover pop to get back north of 173 and back to that 174.75. Or if we give out this zone, back to 170, 169-ish. AMD had a very strong day yesterday off of the squeeze bottom. Tagged that. Reached down and tagged those squeeze bottoms and then took off the 100 call on AMD, open in our beast zone at about 30 cents. It ended up running to about $1.60, $1.80 maybe even. So like a 5-6x amazing trade yesterday on AMD. Gapping down with the market back near in this zone and near these key levels around 98, 99.23. Well, let's see if we can get back above this 99.23, get through trend lines from highs and overnight, and back above 100. Or if it rejects this 99.23 to, let's call it 99.5, and curls back down to 98, or yesterday's lows around 97 and the squeeze bottom. Amazon testing 140 and trying to hold it. 140 has been a big level of support for the last couple of weeks. So let's see if 140 can continue to hold these squeeze bottoms as well. And the daily 15 will be right around there. Basically where we our overnight lows bounced. So let's see if we can quickly pop up below the last couple of days' lows around 141, and a bid to get back to that daily 8, which will be around 142. And if we can get to the top of the squeeze around 144, 145, where that daily 200 sits. Basically, if we can hold the squeeze and the daily 15, we can fight our way back to the 200. We do have 3 key moving averages in here that we could bounce around. But if we start to lose that daily 15 and these squeeze bottoms, we do have that daily 21 down below around 135. But luckily, POC is above at 142.5, right in the middle of this consolidation. So let's see if we magnet back to POC to close the month. BA is going to be opening it near this week's lows. We need it to kind of hold up there, or else it'll be firing these squeezes to the downside. And if it gives out this week's lows, likely coming back to this key level around 163.8, 164, where that daily 21 will be stepping up. We do have POC around 166 and some change, so just above us. But definitely watch that low of week around 165.8, 166. See if that can hold us and get us to bounce up to these daily MAs, the 15 and the 8, to consolidate back in that range. Okay, right down near our key level at the bottom of this 4-hour squeeze. Sorry. No, yeah, 4-hour squeeze. So let's see if it can hold that key level. Get a quick cover pop back to 195. If it starts to give out this key level, then it can roll back. You know, we've got the mean basically at like 190, 190.5 it'll probably be stepping up to. The daily 15 down there and that key 189.5. Should we start to give out? Google with some interesting prints. We do have pocket 119.5. Just underneath 120. So let's see if we get that cover pop back up to POC. Back to 120 where we've been consolidating. As you can see, we went from the daily 8 and slapping the daily 15. The daily 21 is just below that, and we'll be stepping up, a little closer to 118. It'll be kind of closer to 17.75 probably. So if we start to lose that 118.5, that daily 15, we can easily get to the mean and tap it and still kind of stay in these squeezes. But if we give all of those things out and just keep dropping, I'd be watching this 115.71 as a target to the downside. We have about a 3.8 TR. So yeah, we can get down to that 117. And if we really wanted to blow past to that 116. GS. This will also be a decent gauge, even with the gap down, just near this week's lows. And, last Thursday's low, it's kind of down there. So definitely watch this week's lows, just a hair below 350. But if we can hold that in 350 and pop back up to this consolidation, likely just going to stay in all these squeezes. For OPEX, if we start to lose that low, we can start to slip down and fire these squeezes to the downside, getting back to that 344 and 343 where the daily 200 sits. With an 8.8 TR, we can get there. JPM. Well, let's see if we can hold 120. Pop back up to about 122 in this consolidation. If we start to lose 120, pretty clearly got the daily 21 sitting down below at about 118. Meta, definitely a lot weaker than most names, and pretty much already back to where that CPI shot us up, right? So let's see if we can hold 170, 171, and push back up into this consolidation above the daily 21 and around 174. We did at least have POC move up to 180 up in all of this consolidation. But not a lot of interest here. If we keep slipping, daily 50 down below 168, 169. We've got our 4-hour squeezes opening up a little bit. 285 going to be key because it was pretty staunch resistance, and we have not really tapped it since we got through on that CPI data. We do have our daily 15 right near there, so if we do start to slip, looking for that 285 to hold us up. If that gives out, we've got the daily 21 going to be stepping up around 282. We close around 290 with a 5.8 TR, so maybe a little too far to get to the daily 21 today. And we have trend line from lows coming in right near this daily 15. So let's see if the squeeze bottom can hold us up, or this trend line in the daily 15 around, basically 285, 286, looking for a bounce there, and to get back near 290. Netflix. Holding up a little bit better than other names. Not quite to this week's lows. So let's see, we got a little pocket here, let's say between 238 to 240. Let's see if that can support us. Start to get us through this trend line back to 244, 246. If we start to give out, that daily 15 is going to be stepping up right near that 238. And the daily 21 will be kind of near 232. but that's a little outside of ATR's reach. NVIDIA. I will say, as we come into this little bit of a wedge, right? We could just stay in this range. NVIDIA hasn't fallen too far. It's at the daily 8 and 15. And pretty much closed around POC at 187 up here. So we could easily just bounce around these key moving averages, stay above a low of week, and, you know, kind of stay in this 82.5 to 86.5 range. QQQ. Let's see if 325 can provide support. It's basically kind of last Friday's lows, right? So let's see if they can provide support, give us that little cover pop back to the daily 8, into this zone above. I'm going to update this to right about there. We already did have one of those wacky wicks right up to this zone and trend line. So as long as we can find support, looking to fill that wick and just get back to this consolidation at the very least. But if we start to give out 325, yeah, back to this daily 15 and 323. Also keeping an eye on last week's low, or last Thursday's low, sorry, which is around that 323. Gosh, come on, don't freeze on me. There we go. So yeah, definitely mark these last Thursday's lows on a lot of these names. Right around 323.5. The daily 15 will be right above that, so that'll be the target if we do keep slipping. I'm going to just skip some of those names and go to SPX. Going to be opening about 40 points down, so around 42.40. Let's see if this 42.35, 42.40 can give SPX a bounce to get it back up to this consolidation around 42.70, right? But if we start to give out that 42.40, 42.35, we can easily get back to filling this gap and getting to Thursday's lows, which are around 4,200. Let's see, we closed around 83. SPX, it's a 60, 70 point ATR-ish. So yeah, if we start to give out that 40.35, can get down to this 42.18, where we bounced last Friday. And if that 42.18 gives out, then we're coming back to that 42.08 to fill this gap. Daily 15 just below that. Actually, the daily 15 will be stepping up just a hair above 4,200, maybe 42.05, or at the bottom of this zone. So if we do keep slipping, we could fill this gap and tag the daily 15 on SPX. SPY rejected that 426.36. Established POC really close to that, 426.94. So POC, just call it 427, and this 36 making a nice zone above as we arrive down at this zone. So basically, let's see if our zone here at 423.53, 422.82 can provide support to give us a cover pop with the target of getting back to this zone with the 426.36 and 427 where POC is. So we got a nice zone above. As we get down to a key zone, we could pop up and then just settle in between these to close out the month. If we start to lose that zone, next key level, that 419, but that would be almost a 10-point drop from where we closed yesterday, so a little outside an ATR's reach. Tesla. Gap and down. We do have a little interesting wick back up to that 910 key level. So let's see if the squeeze bottom can hold us up. We have the daily 15, 8, and the 200 all sitting here. Between 895 up to 905. So let's see if Tesla can continue to hold pre-market lows around 890, the bottom of the squeeze, and basically just settle back up in between, this 895 to 910, just kind of settling in there. We do have the split next week. And, Tesla can kind of do what she wants a lot of the time, but it's hard for her to just take off if the market is going to slip, right? Definitely draw your trend line from highs. And frankly, if we update this to these lows, there you go. We'll get a little trend line in here too. Close enough. So you can see, basically like I talked about, we have a wedge going into an OPEX Friday on a huge key name. We could just stay in this range to close the day. But if we give out that 890 and this trend line, it's back to 865. VIX. This gap got filled, so going to get rid of that. And now we'll be dealing with another gap here. We've got all these squeezes in place and we're already arriving at the daily 15. So if we are going to get our cover pop today on VIX, we're going to reject this squeeze top, this daily 15 during the cash session. Around 20.9, 21. So if we're going to get that cover pop, looking to stay underneath that, reject that, and start heading back down to 20.5, ultimately to getting back to 20, which should just probably get us back into our consolidation ranges above. And that's right near where we popped and rejected yesterday. And, if we could rip up to squeeze tops, likely would have to give out 20 and head back to 19.5. If we're going to see the market roll over, we need to, the VIX will need to get above this daily 15, above that 21, with a goal to get to that 21.5, where the daily 21 sits, just outside of these squeeze tops. And yeah, Danny, we don't have any economic data. I will just do a quick double check and pull that up for us. At 9, we just have a Fed speaker, and then at 10 a.m., advanced report on selected services. So not really any economic data today. We do have some PMI next week, durable goods, core capital equipment, jobless claims as always. some GDP. So looking like next Thursday is going to kind of be the bigger data drop, Thursday and Friday. But yeah, that's pretty much it for prep. Hopefully this is helpful for everybody. Thanks for tuning in, and we'll see you guys in chat today.